HODL de Bitcoin.
Hello, everyone. Welcome to the BTC Sessions. Got a special guest today. Again, I've got Mauricio Di Bartolomeo. Welcome back to the show.
Yeah, thanks, man. Thanks. Got to be here.
Yeah. So Mauricio and the guys at Ledden, they have been sponsoring my show. I'm very happy to be partnered with them. Mauricio's got a hell of a story. If you haven't seen the video of myself and Mauricio talking about Venezuela and what's going on there and how it links to not only his family, but to Bitcoin as well, do check that out. I will link that show down below. It is a hell of a watch. Yeah, Mauricio, I wanted to have you back on and chat a little bit about what you're doing at Ledden and kind of what you guys are, how long you've been around. So maybe you can give people a little encapsulate what you guys do.
Yeah, I'd be happy to. So at Ledden, we have built a company that essentially provides better, we call it a better home for your Bitcoin and a place where you can make the most of what you hodl. And so our first product was a Bitcoin-backed dollar loan. So in essence, if you need some spending money for any reason, or if you want to buy more Bitcoin, whatever you want to do with the excess or extra money, you can essentially post your Bitcoin under custody with us. It sits under insured custody, and we advance the dollar loan for you. And so the way we do that today is we lend 50% of the value of the Bitcoin on the spot at the day of the loan. So if you have, call it one Bitcoin, roughly $10,000 Canadian, you wanted to take out a loan at that time, we would be able to advance a $5,000 loan. And then your Bitcoin would stay in custody with us. So we use BitGo that has BitGo Trust as an insured custodian. So the coins are essentially there. We assign a unique address for every borrower, every client, and you can do real-time proof of reserves. You can ping the wallet with your node, with a block explorer, but essentially you can always trust that your Bitcoin is always sitting there where you sent it. It won't move until such time as you want to repay your loan. And then the way it works, so we charge 1% a month for every an interest for the loan, and then there's a 2% administration or setup fee for when you first take out the loan. It's a one-time fee, and then there are no monthly payments. We let the payments accrue to one last bullet payment at the end, and any price change in the Bitcoin is yours to keep. So it's actually, when we launched the service January of last year, or actually January of this year, Bitcoin was around 3,000 to 4,000. So all of our clients that took out loans from us then, instead of selling, it worked for them. It worked as designed, and so they're very happy. And so when that happens, you have the option to either borrow more or use some of the increase in the price to repay down your loan. And so we think of it as a mortgage for your Bitcoin, essentially.
Yeah. I was one of those people that got I was first testing it out. I tested it out. I just did like the smallest loan I could do just to see how it worked. And I mean, at the time, I put in X amount, got $500 out, and then because I wanted to see how it worked on both ends and like how to close out a loan and everything. And yeah, I was looking at like the amount of Bitcoin that I was taking, and so you have the option to pay it back via like e-transfer or like wire transfer, but you also have the option, I believe, which I did, to use a portion of the collateral to pay back the loan. Is that correct?
Correct. Yeah, and then so we give you a quote at the time you request to repay, and if you agree to the price, then we'll convert it for you, and we'll pay down all your outstanding amount, and then we'll return any excess Bitcoin to your wallet address.
Yeah, awesome. Yeah, so I ended up doing that, and I was like, oh, there's an excess there. It's been a good year so far.
I'm happy.
Yeah.
So yeah, and then the way we protect ourselves, so like people might ask themselves, so what happens in the opposite case? So like if Bitcoin goes down in price, and the way when that happens, we don't sell all of your Bitcoin at all. We essentially call the borrower and say, hey, we issued a loan at 50% loan to value. It's now at 70% loan to value. we ask you to please deposit a little more Bitcoin to bring it down to 50% LTV, or to pay down a little bit of your dollar loan to bring it down to 50% LTV. So whichever option you choose to do, that's what we will do.
Yeah.
And then in the event that the person does not respond or is unable to, or they don't have the means to repay or whatever, then Len has the rights to sell the portion that is needed to balance the loan back to 50%.
Yeah. Okay, cool. So that is the loan portion. Now I've gone through this process twice. So I did like a small one to kind of test it out, and I currently have a loan with you guys. And it's been super streamlined. So again, thank you for that. It's been great. Now you guys just launched something brand new. Maybe you can speak to that a little bit as well.
Yeah, happy to. It's been pretty exciting for us. So we launched just last week. We announced the launch of Canada's first Bitcoin savings account, and that's been pretty well received. So the way the account works is essentially you make Bitcoin deposits into a Ledn wallet, and we start paying you an interest on the amounts that are deposited there. So right now our initial offer is 5.1% APY. So we pay compounded interest. And so every month that we pay you, then that payment counts as the principal for the next month's calculation. And so essentially that's kind of that's compounded interest. And the way the neat thing about it is that it can grow exponentially because you just keep rolling the base into the next month. So
yeah. Okay, awesome. So now when I first heard about the service, I started mentioning it on the show, given that you guys are sponsoring. And so I get a lot of questions about these things. And I think they're valid questions. You know, you're coming from a Bitcoiner's perspective. And the number one thing that I hear obviously is not your keys, not your coins. And so people want to know, okay, one, who is this for? Two, what are the risks inherent in doing something like this? And three, like how do you balance like the risk versus reward? So maybe we could dive into who is this for, I guess, first.
Yeah, so maybe, but maybe I'll explain how the model works and how Ledn makes money from this.
Yeah.
And
Okay.
I think that will maybe it's help people understand what the business model is, how we protect everyone on both sides, and how we structure this thing so that everyone walks out kind of better than they came in with it.
Okay.
And so the way it works is the easiest way to think of it is the opposite of our Bitcoin back loan. So in our Bitcoin back loan, we're taking $10,000 worth of Bitcoin for every $5,000 that we're issuing to a borrower. And our guarantee on the funds that we're advancing on the loan side are essentially that is guaranteed by the collateral that is posted in way of Bitcoin in our vaults. So the way it kind of evolved was that people knew that we were in the space and we were custodians of Bitcoins, and then we started getting questions from trading desks and remittance companies and even in some exchanges, and they're saying, oh, would you guys, we're very interested in borrowing some Bitcoin to facilitate some of our withdrawal requests in a faster timeline, or to facilitate trades for large clients that want to realize purchase, but we don't have the Bitcoin on hand, and we don't want to go running out to buy it for them. So we're better off paying a little bit of interest every month just to make sure that we have the necessary Bitcoins to close these deals and facilitate these transactions. And so obviously every one of our lending clients gets a unique address. So we're not in the business of lending any of those coins.
So those, just to clarify for people that didn't see before or missed that point before, when you get a loan, you deposit to a single address, and you can audit that address in real time at any time, and you can see that your Bitcoin has not moved. So that's with the loan where you get dollars. But this is a different revenue model for the savings account. So you can go on there.
Correct. Yes. So for the savings account, we needed to create a vehicle whereby we could essentially execute the same Bitcoin back loan model whereby we would take security. This time it would be in dollars, and we would issue the loan in Bitcoins, and we would have enough dollars as security to repurchase everything that was lent out in the event that the person basically defaulted, or we couldn't get a hold of them or whatever. The loan is secured. So when we're issuing a loan, it's secured by collateral, guaranteed by collateral that we can exercise to make everything whole again. So the way we did that is, so we structured the deposit pool, which is a number of retail clients that would come in and place deposits to earn an interest over time, and so that'll build a float of funds that can be essentially put to work. And then on the other side, we have institutions like exchange desks and remittance companies that are going to be placing dollars with us to borrow some Bitcoin, and they'll be paying an monthly interest on that Bitcoin in Bitcoin. And that's how we're able to basically then pass through the yield or the interest earned to our depositors, and we take a spread. And so that's the way the model is set up. And so, in the context of not your keys, not your Bitcoin, I think it's important to highlight that, you are trusting Ledn to essentially carry out that relationship with the institutional borrower, and ensure that we're taking the proper guarantees and making sure that we're basically taking all the precautions so that the Bitcoin will never get lost, or that there's no risk of this, or any risk that we're taking can be recovered with the collateral that we're receiving. So as we got more comfortable with our Bitcoin-backed loan model, and we talk to the parties that are approaching us are very reputable parties that we can take the necessary collateral or security from, and that we can feel comfortable advancing those loans. So that's kind of how the model is structured. And full disclosure, when you make a deposit, we do have the private keys, so you are entrusting us to basically manage those Bitcoins. And by the same token, the second you want them back, you submit a request and we process the same, which is process your withdrawal. It's essentially a merchant bank model. By taking collateral.
Okay. So when I've kind of been looking at use cases of who might want to use either service. So a lot of the times on the show, I'll talk about when it comes to the loan model, it could be perhaps somebody that has a sudden expense or something like that they want to pay for, but they're maybe in a pinch. They don't want to sell their Bitcoin because they're worried about Bitcoin appreciating, in the time that they've sold it before they're able to buy it back. So that could be a use case. Another use case of it is kind of a way of going long on Bitcoin, where maybe somebody says, hey, I want to, I've got one Bitcoin or however much, I'd like to get a loan, and so then you get half the value in dollars and then repurchase additional Bitcoin on top of that if somebody wants to do something along those lines. When it comes to the savings account, obviously it's a person's preference as far as risk versus reward. So you have a rate that's getting paid back as far as interest goes in Bitcoin at a certain percentage, and so if somebody sees that as a possible value to them, and they're okay with that type of risk, then that may be for them. Now, what comes up in my mind about associated risks, I was wondering if maybe you could walk me through a scenario or maybe I'll propose to you a scenario, and you could tell me in this situation what happens. So one of the situations that I think about is, okay, you've lent Bitcoin to an institution, like I deposit and I'm expecting a certain percentage back. You've lent Bitcoin to an institution, and one of two things happens. One of which is they get hacked and they lose the Bitcoin. So in which case that could be a total loss for them. Or two, the price of Bitcoin goes up very, very quickly to the point where they're unable to pay back their loan given the current price of Bitcoin. So as those things unfold, what's the course of action there? What happens, and how are people using a savings account protected in those situations?
Yeah, great questions. And I think it's always good to kind of take things out of the abstract and bring them into like the what happens if this happens.
Yeah.
As I was mentioning earlier, when I was talking about the concept of collateral, before we advance any dollar loans, we take twice the amount of the amount of money that we're lending in Bitcoin, and we keep that as a sort of guarantee that whoever we advance the funds to will pay us back. And in the event that that person doesn't honor the terms and conditions on our agreement, then we, by that same agreement that we both agree to, have certain rights to essentially be made whole based on the default. If either party doesn't meet the terms and conditions, there's basically remedies for that in the agreement. So the way we take security from our dollar loans is by saying, or by earning or ensuring that we have the rights to sell the Bitcoins to be made whole again, and so that we can repay our dollar investors. So similarly, on the Bitcoin loans, we'll be taking collateral in the form of dollars. So in the hacking situation, in the event that that institution gets hacked and is unable to repay us the Bitcoin, we would have enough collateral on hand to essentially repurchase the Bitcoins that were lost and made the whole to our clients. It's similar to the kind of Zappo self-insurance fund, where they just have a ton of Bitcoin that is sitting on an insurance wallet, that if they get hacked, they'll have that kind of fund to replenish. So again, it really boils down to us as a risk manager, making sure that we can always control and have the right amounts of call it security to repurchase any things that we advance, or to make whole the other end of that liquidity. And then in the margin call scenario, which is essentially what that would be, it's instead of a margin call on the way up, it's a margin call on the way down. It's a margin call on the way up. So that's actually something that we're very much prepared to do, because we already know how to do that on the downside because of our Bitcoin-backed loans. So all of our monitoring essentially just gets flipped, and we keep basically a tabs on how fast it's rising. And so our Bitcoin borrowers also have a loan to value ratio. And so when that ratio keeps getting triggered higher, we have the same or very similar mechanisms on the loan side to say, hey, pay back some of the Bitcoin or give us more dollars, right? So the equivalent of.
Yeah, exactly. Okay. So it's funny because I guess on either side of the coin, in one instance, technically you guys as a company, when you're issuing a dollar loan, in a way that's like kind of like shorting Bitcoin, and then on the other side it's like longing Bitcoin in a certain sense, like as far as what happens, if the price goes one way or the other.
Yeah, I think the way I like to think of it, and in fact I used to do this in Venezuela quite a bit, is you're shorting fiat. And you're shorting fiat using a different mechanism, or sorry, not a different mechanism, a different asset. So in my case in Venezuela, what would happen, how you would make money from hyperinflation, was that you would take loans from banks there that were forced by the government to lend out at 10 to 12%, not 12, it was like 35% was the ongoing rate at the time. And then so you would go in, you would borrow bolívares, and then you would convert them into dollars immediately. And then you would literally just sit on the dollars. Hyperinflation would do its thing. 3 months later, you would exchange a fraction of what you had borrowed from those dollars that you had converted, and you would pay back the entire principal. And so, in a way, when you take out a mortgage to buy a home, in essence, you're doing something similar, right? Like the home is an asset class that so many of them always get ever made. Obviously, money gets printed at a faster rate. And so like the demand and the market dynamics force a house's value to appreciate over time. Fiat is designed to depreciate over time. So with enough time, your house will keep getting more and more fiat from it. So it's a similar setup. And we're trying to create, that's why we try to refer to it as a mortgage for Bitcoin, because the idea is that in this virtuous cycle, if our investment thesis plays out and many others, Bitcoin will continue to rise slowly over time. You'll be able to borrow more cash funds from that, invest it in other asset classes. And I think another huge use case for a loan product is essentially diversification, right? Like if you're somebody that's sitting on a $2 million Bitcoin position that just kind of ballooned on you, and you want to be put, and you're looking at the peak today, and you're like, okay, well maybe it's better that I go into some real estate or something, or just diversify the pie a little bit. Mind you, you're still exposed to the entire amount of Bitcoin that you hold, but you've already made the other asset purchase, so that asset can now start appreciating. And if the situation changes with Bitcoin over time, you're already in the other asset. So even if your loan gets, call it, liquidated, you've exited it, and you exited it at a time that allowed that other investment to also generate fruits. So it's actually a very tax efficient way to do that, because when you're selling on a tax gain, on a large built up gain, you'll have to pay capital gains on that. Whereas when you borrow from an asset that has increased in value over time, you're not selling the asset, so it's not a taxable event.
Yeah, and that's an interesting point. A lot of people don't realize, when those sudden expenses come up, or you do need to get your hands on dollars, or you want to invest further, or diversify, that if you've been holding onto your Bitcoin for quite a while, then that is a taxable event when you're directly selling, whereas this in that instance, or obtaining a loan is not, because you're not selling the underlying asset.
Exactly. So it's something we like to remind our clients that it's just to make sure. And then if they are reinvesting the loan proceeds into a different investment, that interest that you pay on a letter loan can actually become tax deductible as well.
Okay, cool. Can you just talk to the insurance side of things, like the insured funds, a little bit? Because again, people a lot of the time they just see, oh, my Bitcoin is not sitting in my own wallet. What assurances do I have? Like in a scenario where something happens to the wallets that you guys are custodying, what goes down?
Yeah, that's a great question. So as I mentioned, we use BitGo as our custodian. We chose BitGo after doing a very thorough analysis of all the custody solutions available to us, both domestically and internationally. We saw their sort of the technology stack that they offer, the security features that they have, as well as their insurance coverage. We did a lot of digging around the insurance policies, coverages, who has what, who's covered for what. In fact, we tried to insure our own internal custody solution because we built that. That's what we launched with. But as we were looking at the options that we could offer to our clients, how long it would take us to sort of get our custody solution to the level that these other ones were already offering, and the depth of the policy coverage. I mean, we were very much not surprised. We were very pleasantly. We were very pleased to see how far along the insurance industry has come along and what they're willing to insure today. Because I'll be the first one to tell you that largely when these insurance policies started coming out, they were just pretty much placebos. They weren't really covering any of the actual attack vectors that I, as a Bitcoiner, thought was the real security hole from a custodian standpoint. But we're very satisfied with the coverage of the policy that BitGo has. They're actually, they have quite a bit of information on their site. Anybody that wants to learn more and have get a bit more something that they can sink their teeth into as far as their coverage and what it involves, we have some materials that we can share as far as what is included and what isn't. And I invite most people to kind of put that policy toe to toe with any other ones, because like I said, from the results of our analysis, they were just the safest place that we could find, that we could work with. And just to, if you want to get into a little bit of the mechanics of what a hack to BitGo would have to look like, we have individual wallets with independent seeds for each one of our clients. And so there is no let-in wallet that they can attack and take away all of our funds. So and the way BitGo is structured, and beyond that, the way our accounts are structured within BitGo, a hacker would basically have to get into a large number of private keys that are essentially just a web of difficulty to even come in. So I think I don't want to obviously say I don't have a crystal ball, but my guess would be that any sort of attacks on a facility kind of like BitGo would be, at best, they would have the time to sort of target one or two addresses within that entire facility. So it would be very hard to kind of wipe everyone's accounts from a facility like BitGo. And so, like I said, we did our homework. We looked around at what custody solutions were available, and we landed at what we think is the absolute safest place and the best technology to work with.
Awesome. Okay, so what I'm going to do is I'll include kind of links to everything that we've been talking about. So again, in summary, like Ledn, you can go in. If you have Bitcoin, you can deposit and get a Canadian dollar loan for 50% of the value, and your Bitcoin just stays Bitcoin. It is locked in a single address. It does not move. You can audit it in real time, and if the value of the Bitcoin goes up, it's still all yours. It doesn't go away, and then when you repay, you are refunded. On the other side of things, if you want to look at earning interest on your Bitcoin, then you can deposit with a savings account, I believe it's sitting at about 5.1% right now, compounded monthly, and you get paid out in Bitcoin, not in dollars, in Bitcoin. So, you deposit 1 Bitcoin, then you're getting your 5.1% of that compounded, over the course of the year. And yeah, so I'm going to link to that down below. I'll link to the BitGo stuff as well. And is there anything else that you think people should check out?
We're pretty excited. We're going to be making some really cool announcements of our services in other countries. So me being from Venezuela, we're very excited to take this service to LATAM. Yeah, I think we do have a few other products and features on the roadmap. I think we're going to have to do another show for those because we're pretty excited about them, and I think we're about ready to kind of start laying out the roadmap for those releases. And so I guess I'll let you know, but stay tuned because we have some pretty cool stuff that we're working on.
Awesome. All right. Well, Mauricio, again, I got to thank you so much for coming on. And everybody watching, if you have not seen the episode where we talk about Venezuela, please do go check it out. It's a hell of a watch. And of course, go check out Ledn. I will have links for that down below. And if you use the link down below, you can also if you get a loan, then you'll get $50 of additional Bitcoin added to your wallet there. So yeah, thanks, Mauricio. And I look forward to talking to you again soon.
No problem, Ben. Take care. Have a great one.
All right. Cheers.